So, last class, I taught you guys the concept of continuation and also the concept of a reversal. Remember, I taught us that um, there are two things that you look out for in a trade, or when you're analyzing, there are two things that you look out for. It's either you're looking to join the trend or you're looking to um, take a reversal. And both of them, each of them have their different concepts on for trading them. So now in this class, we're going to talk, I'm going to teach you guys about uh liquidity and types of liquidity that we have in the market. All right. So let's go into liquidity. What is liquidity? Liquidity basically means money. That's what liquidity is. Have I taught you guys liquidity? Let me know. Because it's been weeks since we had our second class after that. Have I taught you guys liquidity? Let me know, guys. Okay, no. All right. Okay. So liquidity basically is literally means money. Now, and in the market, there's always going to be liquidity in the market. We use liquidity to enter the market. We also use liquidity to exit the market. So liquidity is very, very important when you're trading. And the liquidity that we use to enter the market can also be different from the liquidity that we use to exit the market. All right. Now there are basically um three types of liquidity, but mostly I use two, right? There are about three or four types of liquidity, but I mostly use two types of liquidity. The first liquidity that we have is the inducement liquidity. That's the first type of liquidity that we have. Inducement liquidity. Now, what is inducement liquidity? Inducement liquidity inducement liquidity is the first valid pullback that you have after a market structure shift or after a multiple break of structure occurs in the market, right? It's the first valid pullback after an MSS occurs, after a market structure shift occurs, or uh after a um multiple break of structure occurs. Right. Now, I'm going to, give us examples in the chat. Let me see okay, let me use GBP for example. Let me use GBP for example. So inducement liquidity is the liquidity that we use when we want to enter a trade, because whenever, you know, a structure shift occurs or multiple break of structure occurs, a lot of people just, but normally, a lot of people just enter trades randomly, and then many times they get stopped out and they're like, oh, why did the trade hit my stop loss? Many times it is because you either enter a trade before liquidity or at the liquidity. So you're meant to, someone's audio is on. So you're meant to enter a trade before. I don't know why this is taking time. You're meant to enter a trade after your liquidity, your inducement liquidity, right? So let me give us example in the chat. Now, if for example you have maybe you have a structure shift like this. Now this is a downtrend. And if for example you have a structure shift to the upside. Now, remember that I've taught you guys market structure shift. Now, this is a clear concept of a reversal, but that's not just all. You don't just rush to enter the trade, right? You need to wait for what we call inducement liquidity, which is a pullback after your structure shift or multiple break of structure. In this case, it is a market structure shift, and this is your market structure shift here. Now, after that market structure shift, I will not just rush to enter a trade. I will not just rush to take a trade. I will need to wait for a 50% pullback to a 50% pullback of that a 50% pullback of the candle that caused it. So this is the candle that caused my structure shift, right? This pullback basically is a valid pullback that I can call my liquidity, but I will not fully call it my inducement liquidity yet until it has gone back to close above the body of that candle that caused the market structure shift or the multiple break of structure. Now, you can see here, my market structure shift is here, right? Let's assume this is where the candle closed, and then there was a pullback here. Now, this pullback now, I will not mark this as my inducement yet until the pullback has come to take out or to close above the body of that candle that caused it. That is when I can now mark this area as an inducement liquidity. If maybe it struggled to close above, it did not close, I won't call that my liquidity yet. If it struggles, maybe the third candle came, it didn't close above it, and then maybe it is now the fourth candle that now closed above the candle body that caused that this MSS for me. This is now where I will now mark as my valid inducement liquidity. Are you guys following me? Are you guys following me? Right. Now, let me use an example in this chat or in the chat. So this trade basically left us, right? Now, uh, first off, yeah, this was a downtrend, right? This was a downtrend move. You can see this was my last lower high. This was my last lower low. And then this last lower low now eventually came and took out this last lower high, causing a market structure shift here. So this is an MSS here, right? Now, after that MSS occurred, you can see the next candle was this bearish candle, right? But it came down and it didn't break past, it didn't close above the candle that caused it. It is now this third candle that now eventually, after it made the pullback here, it eventually came and closed out. This is the body that caused the body of the candle that caused um the MSS here, right? And this is where the candle pulled back before taking out that body. So this is now where I marked as my inducement liquidity, right? And then this is the next valid point of interest. Talk about that, when we get there. So this is one example. Let's also give let me also, because this was a confirmation. This was not the main trade, but this was to get directional bias, which is how we got this setup. So I think I got my uh confirmation from, I think, 15 minutes time frame or so. Let me go and see. So this is the trade here. Now, after this was where I was looking out for my confirmation, and market also did the same market structure shift there. So you can see this was my last low, this was my last high, this was my last low, this was when the last low came and took out this last high here, causing a market structure shift. So this was literally me trying to get a confirmation for this trade, right? I'll teach us when about confirmations when we get to directional bias, but I'm just laying the foundation so you can get a blueprint of, market structure, shifts, continuation, inducement, liquidity, and then when we get to directional bias, we apply everything. Now, now see here, this was my MSS here, my market structure shift. This is where the candle body closed. And the next thing was what? The pullback. And yes, the pullback eventually came and you can see it's closed above the body that caused the candle. So this is a valid pullback, valid inducement liquidity to mark. That's why I marked here as my inducement liquidity. Same thing.
Sorry, but sorry, we can't see your cursor or something. Your what you're saying now,
You can't see
like we
my
are supposed
cursor.
to. Yes. We
My
can't see.
cursor is showing now.
From my end, I can't see, and it seems someone too is not seeing the cursor also. Sorry for
Let
disturbing
me
the class.
see. Is it that you can't see my screen or what? I don't understand. You
I
can't see
can
my
I
screen. It's
can
not
see
me that is.
the diagram, but I can't see the cursor.
Well, you are seeing my screen.
Yeah, the diagram, just the diagram, but we can't see the movement of your cursor at all.
Can you see it now?
Okay, let me.
Let me stop share again. Can you see it now? Can you guys see it now?
Yes, boss. Yeah, I can see now. This one is totally different from what I was seeing before.
Okay, sorry about that. Yeah, I'll go back. So, what I'm trying to make you guys get to learn in this class is liquidity, right? And I'm getting to explain the first type of liquidity, which is the inducement liquidity. And your inducement liquidity, like I said, is your pullback that occurs after your market structure shifts or after your multiple break of structure, whichever one the market presents to you. After that concept has occurred, the next thing you should look out for is what? A pullback, which is called your inducement liquidity. And I said, for your inducement liquidity to be valid, for you to mark a particular inducement liquidity, your inducement liquidity must go back and close above or below the candle that caused that. What I mean by close above is if it's a market structure shift to the upside, your inducement liquidity must close above the candle that caused the multiple break of structure that caused the multiple break of structure, yes, or market structure shift. If it is to the downside, it must close below. But this is an example to the upside. You can see this is a market structure shift here, a clear market structure shift here. This was the last low, this was the last high, this was the um or this is also a low, this is also a high, last high, this is also the last low that now took out. So I can even still mark here as an MSS because this is also a last high, but it's still one candle that took all of them out, so no problem. So this is my MSS, right? Now, after that MSS, the next thing now is the candle that pulled back after that MSS is this candle. You can see it had a week, a long week. Now, that week also went ahead to produce candles that closed above. You can see this is the candle that caused my market structure shift, and this is my pullback. That pullback created other candles that closed above this candle that caused the MSS. So this is a valid. That's why I marked here as my valid inducement. Right now, let me also give another example here. So this is another one. This one is for continuation. So after I got my MSS, you know, I'm literally trading, looking out to take more buys because I'm bullish. And like I taught you guys, concepts for continuation is multiple break of structure. So I also applied multiple break of structure here. After markets triggered my market structure shift zone, or where I was expecting my entry, next thing is for me to keep looking out for opportunities to go in that direction, which this was an example here. Market took out this high here. This is my single break of structure. And then market now took out this other high. So these are two key highs that market took out, which now gives me a multiple break of structure. So this is a concept for continuation. Now, still the same thing. I wait for my pullback after. Now, this was the candle that caused the multiple break of structure, right? You can see here. This is the candle that caused it. It closed above the wick, so this candle is one that caused it. Now, after that candle occurred, you can see the next candle. The next candle was a bearish candle. You can see, but it did not close above this candle that caused the market structure shift. So I am not marking this as my inducement. The next candle also did not, right? You can see this is where it ended. But the third candle produced other candles that eventually, you can see it, eventually took out this high. Can you see this third candle? That's why I marked this third candle as my inducement. And that's why I was able to pick my entry from here, which I'll teach you guys other criteria. But this is a very important criteria in picking your entries. Like I said, we use inducement to enter the market and also exit the market, right? So this is this is a second example. Now this is a bullish chart. So let me see if I can maybe get let me see. I think there's a trade. Which trade did I drop for you guys of recent? I think I dropped Euro GBP. Yes. I dropped Euro GBP for you guys of recent, and currently been in profit, right? Uh, yeah. So, so this is the Euro GBP. So first off, I got my directional bias, and then waited for a confirmation. Note that directional bias is in our last class. That's why we need to cover everything before you now go ahead and start analyzing yourselves, right? So, okay, I think I got this on 4 hours. Right. So on 4 hour time frame, you can see this was a bearish market, right? Lower low, lower high, 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 lower low. Okay, this was a lower low, lower high. This was a lower low and a lower high. You know, it's not, it might not be clear, but this is actually a last lower high. If you even go to 1 hour time frame, you're gonna see. So yeah. Or even if you even want to mark this as your even if you want to even mark this one as your MSS, it's still going to result in the same thing, right? Even though you want to mark this as your market structure shift, you want to say this was your last uh lower high and your last lower low, and your last lower low took out this lower high. So if you want to mark it as your MSS, it's still good and fine, right? But what is the important thing? After your MSS, the next thing what is inducement. So even if I mark here as my market structure shift, the next candle is what? This candle. This candle is my pullback inducement, and it closed above this candle that caused my MSS. That's why I marked here as my inducement. Even if this was my MSS right here, the next candle that pulled back has already mitigated this area. So I cannot even pick this area, this breaker block as my entry. I'll still pick this. So still the same thing, right? But this is me marking my inducement. Even when I got the confirmed entry on the, was it 15 minutes time frame? I think so, but let me check. So this was where I was. this was the POI I was expecting market to give me a confirmation from, and it gave me a confirmation. So this was my last low, last high, right? This was my last low, last high. This was my last low. This was my okay. This was my last low, last high. This was my okay. This is my last low, right? This is my last low, and my last low proceeded and took out this last high. So this is my market structure shift here. If you even switch to, if you want to switch to, I think even on a 1 hour time frame, self, it's still the same thing. Let me see. Even though I got it from 15 minutes though, or let me just use 15 minutes because I got it on 15 minutes. So this is where my MSS is, right? This was my last high. This was my last low, higher high. My my last higher high, my last higher low, my last higher high. This is my last higher high, and this is when this low came and took out this last higher high, causing a market structure shift. The next candle that was a bearish candle, right? Although the bearish candle produced this bullish candle that eventually came and closed above this body of the candle that caused the market structure shift. So this is why I marked this this zone as my um inducement, right? So you guys are, can you guys, I've given you guys multiple examples. There's also a trade I took on silver, which I just took the trade, but I hope it goes good. So this is the trade right here on silver. Let me see if I just hope the spread on Forex on FXCM is not bad. All right. So um uh, on 4 hours, I was bearish on silver because the market gave me a multiple, because the chart was bearish on, I think it was a daily time frame even. The chart was bearish on a daily time frame. You can see it took out multiple lows. It took out this low, took out this low. So this is a bearish market, and it has been a bearish market as well, right? And I thought, although we've not gone into directional bias, but then remember I said for continuation, your concept you should be using is multiple break of structures, right? So this is market taking out multiple breaks, right? Market took out this low here. Market took out this low. It also took out this low here. It also took out this low here, and it also took out this low here. So you have more than 3 lows that market have taken out. So this is literally giving you a bearish trend, right? So this is a multiple break of structure to the downside, which is a bearish move. Now, what's the next thing? The next thing is what? My inducement. So after this, see the candle that caused the multiple break of structure, this is where it closed. And the next candle that pulled back was this candle here, which produced the next candle that now it took out this, it closed below this candle that caused the multiple break. That's why I marked here as my valid inducement, right? So that's why I marked here. Now, for my confirmation, I used 45 minutes and still the same thing. This was my inducement here. So this was where I was expecting a confirmation. And after it gave me my market structure shift, you can see the next candle that pulled back produced the next candle or other candles that took out the close below the candle that caused the market structure shift. That's why I marked here as my valid inducement, right? Even for the re-entry, I even got on the 15 minutes time frame. This was a multiple break. Because I'm bearish, I need to look out for continuations to join bearish trend, which is multiple break of structures, right? So market took out this low. This is one, and also took out this low again. So this is a multiple breakout structure already. Now, the next thing is what my inducements, which is this candle that pulled back, produced other candles that took out the close below this candle that caused the multiple breakout structure. So that's why I marked here as my inducement. So I've given you guys multiple examples of inducement. So of the inducement liquidity. So you also want to go ahead and also go to the charts, mark inducements, send to me, let me see if you guys are following, or if you're getting it correctly, or where you need to adjust, right? So yeah, that's for inducement liquidity. Now, this is the type of liquidity that you use to enter the market. Now, why do you need to wait for inducement liquidity to form before you enter? It is because the market will always go back and sweep that inducement liquidity. That's why it's called liquidity sweep. The market always goes back to take its liquidity because that is where money is. Liquidity is where money is. And because there's money there, the market has to go back and take it. That is why every time inducement liquidity occurs, the market will pull back and tap a POI there before it starts moving. If you switch back to 45 minutes time frame here, you can see this was my inducement liquidity, right? And then what happened? It went back there and swept it and then tapped the nearest POI there, right? Because in the market always goes back to collect its inducement, its liquidity. So that's why before you enter a trade, one of the things you need to look out for is you need to make sure that there's inducement in the market, because the market will go and take back that liquidity, right? Make sure you're not entering a trade before liquidity or at liquidity. If you enter a trade here at this liquidity, what will happen? Market will come back and take you and go and tap where it wants to tap and start moving. So that's it for inducement liquidity. Now, the next liquidity. Now, you can also use inducement liquidity to also exit the market. What I mean by that is this. After you've gotten your directional bias, for example, after you've gotten your directional bias, right? After you've gotten your directional bias from the daily time frame, if a market structure shift has occurred for you or a multiple breakout structure has occurred for you, the next thing, like normally, is going to be your inducement, right? Now, wherever that inducement ended before it started approaching your point of interest, you can actually take your profit from there. Before I come to this silver, let me give an example on GBPAUD. Let me give an example on GBPAUD. So on GBPAUD, I got my bias from 4-hour time frame, right? I got my bias from 4-hour time frame. Now, this was my market structure shift. This was where it occurred. This was where my inducement occurred. Now, my inducement went up here, up to this point, before it started pulling back to where I was expecting to enter from. Now, my first take profits when I enter this trade, or when I eventually enter this trade after getting my confirmation, is to come and take out this inducement first. My first take profits, this is how I trade. My first take profits should come and take out wherever the inducement stopped before starting to come to your entry point to trigger. That's where I take my first profit. So if you notice, most of my trades, even though this might be my final take profits, which in this case, it still came and took hit it too. But my first take profit, to be safe, right? Or to be much more assured. I don't know if I can use the word. My first take profit should come and take that inducement, or where the inducement stopped before uh before coming to tap my entry. Same thing for which other trade? Trying to think of my previous trades that I've taken. Um, which other trade? Which other trade? Which other trade? Eurocard. I remember I took a trade, or I did an analysis on Eurocard. Yeah, I remember. So this was my analysis on Eurocard, right? This was also a full take profit. Now, this was a bearish market, and then here there was what? There was a market structure shift here. This was my last low, last high. My last low came and took out that last high. So this is my market structure shift. Now, the next candle that formed was this bearish candle. This bearish candle uh did not immediately take out the candle that caused the MSS. It was this third one. So that's why I marked this third one. You can see this third one proceeded and took out the candle, right? Closed above the candle closure, the candle body, right? So this is where I marked as my inducement. Now, this is my where I'm expecting to enter from. Now, you can see that um okay, yeah. You can see that from here, right? Uh this is where I will normally even take my first take profits here, right? This is where I'll normally take my first take profits, although it is small, right? But I mean, I was much more bullish. That's why I even had to extend it. But normally, this is what I would do. Let me go to 15 minutes time frame where I got my confirmation from. But there's really no need for that. But let me give more examples. That take profit was small. I want to give a let me give another let me just use this silver. Let me use this silver. So this silver, right? I got my bias from the daily time frame. This was my multiple breakout structure here. This is my inducement. Now, because this is where the inducement stopped before coming to tap my point of interest, right? You can see this was my inducement, and then this was where it ended before coming to tap my point of interest. So I can literally mark here as my take profit, right? But just to be safer, I had to mark here. Why? Because this is kind of a bullish order block. This is kind of a bullish order block. So if price should want to make anything or any serious move, anything can happen here. I mean, this is a bullish order block on a daily time frame even. So anything can happen. And I don't want to take chances. That's why I had to mark here as my take profit. But what am I trying to say? What I'm trying to say is this. If you have your trade, let's say you have your, this is one final example. If you have your MSS, let's say you have your MSS here, right? For example, and then the next thing is what? Your inducement, right? If your inducement maybe ended here and then came to tap your POI, your first take profit should be at this level that the inducements had to stop before coming to tap your entry. Do you understand? So if you finally get your confirmation and everything in check, this is where you should be looking to take profits first. This is how I take my profits first. Although there's another liquidity called trendline liquidity, which is literally, you know, the market's giving you a liquidity in a trendline form. Even though my overall take profit might be here, right? I could still target here. But if my inducement liquidity is already giving me enough reward ratio, I'm good to go, right? But if my inducement liquidity is take profit is small, the reward ratio is small, then I can extend further. But I hope you guys are understanding. So the next, you can also use inducement liquidity to also take your profits. And I just showed you guys how, right? Now, the next type of liquidity that we'll now move into is trend line liquidity. And I'm going to teach you guys trend line liquidity in the next class. Like I said, I use two major types of liquidity, trendline liquidity and inducement liquidity, right? So I'm recording this class, so I'll send you guys the recording. So you want to watch it. We should have our next class tomorrow, just so that we can be fast. I think maybe this week we should have 3 classes instead of our normal 2 classes. We should have 3 classes this week. So we should have our next class tomorrow. We're going to continue from trendline liquidity, and I'm also going to proceed to the next topic. So I hope you guys learned from this, right? And make sure that when I drop you the recording, you watch it as well and you take notes, right? Even probably go through the previous classes just so that you get to learn and start practicing. So I'll see you guys on the group chats and have a great evening.